Welcome back. The GDP growth rate in at 1.95%, down from the fourth quarter and the MPC meeting for the second time in the year. Let's get some perspective from an investment analyst point of view. I'm being joined by an investment analyst with Afri Invest Securities, Omotola Abimbola. Hello, Omotola. Good morning. Thank you very much for joining us. Well, you were coming in just as the NBS was releasing the first quarter GDP, 1.95%. Was that in line with your expectations?
No, it wasn't. I would say that it was an underwhelming performance. The economy grew 1.95% in Q1, which was even lower than 2.11% recorded for Q4 2017, although the Q4 numbers were they were increased by the MBS. However, the Q1 number was significantly below the consensus estimate of 2.6%. And also, beyond the fact that the growth number was disappointing, another disappointing aspect of the data is that unlike Q4 2017, when we saw a broad-based expansion across sectors of the economy, including agri, industry, and services, this time around we had only two sectors that improved in the quarter, while the services sector relapsed into a negative growth again. And the services sector is a major sector in the economy. It contributes over 50% to GDP, and the second biggest employer of labor after agricultural sector. So in terms of both the pace of the growth and also the composition of the growth, I think it was a disappointing performance, and it was probably, affected by the slower than expected growth we saw in the agri sector. Agri grew by 3% year on year. It was lower than 4.25% or thereabouts that was recorded in Q4 2017. Industry grew in line with estimates because we still have a low base impact for the oil and gas sector, which is pushing industry sector growth upward. However, the services sector, like I mentioned initially, disappointed significantly. It recorded a negative growth compared to an expansion in Q4. So all these three factors led to the underwhelming performance of the number in Q1 2018.
Now, do you think that the delayed budget may have contributed to these disappointing numbers?
Perhaps so, because fiscal policy is very major in the economy. However, when you look at the fact that we had no budget doesn't mean that the government isn't spending. We've been seeing government spending, both recurrence and capital expenditure. The 2017 budget was just closed about a week or two ago. So despite that we had no budget for 2018, doesn't mean that the fiscal policy wasn't working. In fact, we've been seeing government has been paying its dues regarding the recurrence budget and capital expenditure. Although we haven't seen a budget passage, government has been using 2017 budget passed by the National Assembly to continue making capex investments in the economy. So I wouldn't say the budget was a major drag to the GDP numbers. And also the fact that government expenditure is barely 6% of GDP. Nigeria's economy is more driven by private sector spending and investment spending. And the fact that we had a negative GDP growth shows that consumer appetite, consumer confidence is still very weak. And we need to see much more traction on that before we can return to pre-crisis level of growth.
Yeah. So how do you think these negative numbers that we have seen coming will affect the market, or how do you think the market will react to that?
I think for the equity market, no doubt, growth is a very important component of earnings growth. When we are seeing fast growth in the economy, we tend to see higher sales or turnover for companies listed on the NSA. So the fact that we had a lesser than expected growth in the economy in Q1 would have a negative sentiment on the markets. But be that as it may, I think for now the equity market is more driven by investor sentiments regarding foreign portfolio flows in the economy right now than the GDP numbers. So we shouldn't see any knee-jerk reaction in the markets, at least. Okay.
So the MPC is currently a meeting. I guess they've started their meeting, and which of course will end tomorrow. So how do you think this GDP number is going to affect their decision making in this decision meeting?
Well, For monetary policy, I think the key thing for them to note is that although we are seeing growth back in the economy, the growth rate we are recording is still far below population growth rate of 2.7%. So that means that income per capita for Nigerians is still shrinking despite the recovery from the recession. And it also points to the fact that the recovery we are seeing in the economy is still very slow and very fragile. But for monetary policy in Nigeria, their major policy anchor is exchange rate stability and inflation rates, not growth, because we tend to operate a pro-cyclical monetary policy in Nigeria. So maybe not so much we wouldn't see them react to, because if they want to react to this GDP data, the rational thing for them to do would be to ease monetary policy further so they can provide an accommodative environment for more private sector credit growth. But in Nigeria, and even you would notice that treasury rates, the rates in the fixed income market has been moderating since last year, partly due to the lower supply of government securities in the market and also the CBN's deliberate policy of getting down rates in the homo markets. But despite the lower market interest rates, we haven't seen so much of traction in private sector credit growth. Monetary gains data as of April 2018 show that private sector credit growth actually shrunk from December 2017, where broad money supply grew by less than 2%. So for monetary policy right now, I think they also need to recognize the fact that even though the major policy anchor is FX market stability and inflation and price stability, there is still a need for them to provide an accommodative environment to at least support growth in the economy back to pre-crisis level.
Well, I will come to that. How you think they are going to achieve this?